With us again today, as he has been throughout this volatile week, is CNBC's senior economics reporter, Steve Liesman. Steve, thank you so much for starting us off on this Friday. We really appreciate it. Let's take stock of where we stand in terms of this trade war with China. Do you believe it's reached a breaking point, and what are the implications?
Yeah, I'm afraid that those freight cars you showed there at the top of the show are probably going to be empty, going either way right now. I think that, just think about it. If you had a $10 million shipment on the water on the way here, all of a sudden that's going to cost you $14 million in addition. So those carts are empty right now. There is, except for the few things that are exempt from the tariffs. You get them up to these levels. In fact, you get them up about 40 or 50%, you essentially cut off trade. So that's where we're at right now. The only hope now for restoring this are negotiations between China and the United States.
Well, let's talk about some new economic data that we got today. Consumer sentiment, consumer confidence dropping by 11% since last month. Steve, why does this matter, and what do you make of that?
Well, it matters on two levels. The first level it matters on is when people, their sentiment is down, they're less likely to do things like buy, especially big ticket items. Those are the things that are really important for the economy and economic growth. But they get worried. They might put off car purchases. They might put off buying a washing machine or a dishwasher or something like that. And that's before there's even a price consideration, the idea that things will be higher in price. They're just not going to be in the mood to stretch out, not going to be in the mood to take credit on in order to buy those things. So that has a real economic impact. The other thing you mentioned was the inflation expectations. And as you said, back to 1981, with the 1 year. Now, there's also a 5-year inflation expectations. And I'm bringing this up because that's the one the Federal Reserve really cares about. And that you have to go back to 1991 to find a bigger one. And so the idea that people think inflation is going to be higher next year, it's a big deal, but not the biggest deal. The thing the Fed really cares about and they want to keep contained is what people think is going to happen 5 years from now, because that can really influence what they do. And that has spiked up in a kind of worrisome way.
Well, and of course, we're watching what the Fed does so incredibly closely. We're also watching the bond market. We know that the president was watching that quite closely this past week, particularly when he decided to announce that pause on tariffs across the board. Explain, Steve, why the bond market and what we saw there this week is so significant and what it could mean about the long-term economic forecast.
Okay, so for that, I'm going to give you a little lesson in trade. Here's what happens. We buy their stuff. They send us TVs and things like that, and we send them dollars. Those dollars come back in, among other ways, into our treasury market, and they buy our bonds. It helps finance our deficit. They might be, the Chinese and Japanese own a lot of mortgages. So these mortgages are packaged up into securities, and they're sold to, in part, they have about 15% of the mortgage market. So when they either get fewer dollars because we're buying less stuff, or they just feel unconfident or lack confidence in the American market, they could stop buying some of those treasuries. And whether or not they're really doing it, there's concern that they might do it. And so you have bond yields rising up near 450. What's unusual about this is when things get weird in the world, what do people do? They come scurrying to the safety of the United States. What do? They buy our dollar, they buy our bonds, they buy our stocks, because we're supposed to be the safest place in the world. The thing that has been concerning about the trade this week is that didn't happen. We call it in the business the flight to safety trade. And there was not a flight to safety. There was a bit of a running away from the safety of the United States. We don't know if this is a one-time reaction or if this is part of a broader trend where the decline in trade, the concern, honestly, about the leadership in the United States and where they want to go and how they want to get there is causing a broader concern with the United States assets, once thought to be the most risk-free in the world, and now there's been, I would say, quite a bit of risk introduced into it.
Well, there have been so many twists and turns this week. Steve Liesman, thank you so much for helping us understand it all with your great analysis and reporting. Great to see you. Thanks so much.
Thank you.
As we're talking about this escalating trade war with China, I'm joined now by Nick Burns, who served as U.S. ambassador to China during the Biden administration. Ambassador Burns, thank you so much for being here. We really appreciate it. Let's start with this trade war between the United States and China. What at this very moment do you think is the biggest takeaway as we watch these tensions continue to escalate?
Kristen, I think this is one of the most significant crises between China and the United States in the last half century. The stakes are enormously high. These are the two largest global economies. China is the third largest trade partner of the United States, $642 billion in U.S.-China trade in goods and services last year alone. Stakes are high because if this trade war at the levels that you just showed at the beginning of the program, 145% tariffs by the United States, 125 by China. If that continues for a matter of months, it could decouple the two economies, meaning after 40 years of a high level of trade, the two countries would be pulled apart. You'd be down to very, very low levels. That would do damage to both of our economies, but also to the global economy. And then you'd have knock-on effects at interest rates and so on. And so this is truly serious. And it's a massive game of chicken between the two leaders and the two countries. Who's going to blink first? I think what has to happen is that the two countries have to talk at a very high level, preferably behind the scenes, not publicly, because there's been very little communication between the Trump team and Xi Jinping's group in Beijing since President Biden left office, and that has to happen to sort this out.
Well, and you do take me to my next question, Ambassador, because Trump officials just this morning saying that they're not in talks with China right now. And as you put this into context that everyone can understand, this is an historic crisis between these two countries. President Trump saying yesterday he thinks that eventually he'll be able to work something out. How do you see that playing out? And is that realistic? Is that perspective realistic?
You know, I don't necessarily blame President Trump and the Trump administration for the absence of talks, because the Chinese, at times like this, have sometimes just shut down communications. They did that to the Biden administration when I was ambassador in Beijing after the balloon crisis. You'll remember that. I think it's also important to remember that tariffs, a certain level of tariffs, not 145%, makes sense by the United States to be put on China. Why? Because China is a massive violator of the international trade system. China does not respect and has not moved to protect intellectual property rights of American businesses. There's forced technology transfer by the government against American companies. I spent a lot of time with American companies in China over the last 3 years. There's a multitude of problems. And so, you know, President Trump put tariffs on China in his first term. President Biden sustained those tariffs and put additional tariffs, 100%, for instance, on Chinese EVs. So no one's ever gone to this level of tariffs before, and that is part of the problem, because you're now at a level where trade could stop. And Kristen, I think the other issue here is, I think the Trump administration has miscalculated in not getting all the allies on our side of the table to pressure the Chinese together. So if you impose very harsh tariff ceilings on Japan, on South Korea, and particularly on the European Union as well, you take away the natural partners of the United States who all have these similar problems with China. I think that's been a very significant and very unfortunate tactical mistake.
And Ambassador, you talk about the risk that these two economies could decouple, could stop doing business together altogether. Would that raise the risk, present the risk of a potential military standoff as well? What would the worst case scenario be?
Well, that's hypothetically a worst case scenario. I think it's unlikely that this trade conflict, which is quite severe, is going to spill over into other issues, the military competition or Taiwan, because the two governments obviously want to try to limit this. My own view, and you've heard President Trump, is that the United States would like eventually a trade agreement at some point with China, not sustained trade war. I think that's very much in the interest of the Chinese as well. The Chinese economy has slowed down in recent years. They've seen capital flight. There's a demographic problem about the future. And of course, there's a property crisis. So Xi Jinping, I think, does not want to sustain a trade war for 6 to 12 months. That's why reason has to prevail. These two countries have to talk together quietly. I hope that will happen.
All right, Ambassador Burns, thank you so much for helping us to understand part of this incredibly complex situation. We really appreciate it.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.